You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you are doing well because today is webinar day. This afternoon, I will host a webinar on how to invest with conviction. So you can register for free. You just have to key in your email. You're going to receive the link to either watch the webinar live today, 1 p.m. Eastern Time, or get the replay. So if you want to watch that, there's the only place that you can see it is by registering, and then you're going to get either the replay or the live event. So you go to moosemarkets.com/webinar, moosemarkets.com/webinar, or you click on the webinar link in the show description below. All right, so today we are actually going to talk about one piece of that webinar that is probably like the most important part. So if you cannot make the time, I mean, you should, because there's a lot of graph, there's a lot of example, and there's a lot of like freebies I'm going to give away to help you invest with conviction during that webinar. But I mean, I get it. If you have only 8 minutes, well, there you go. You're going to get like an hour presentation in a nutshell. So there are 3 key points in my presentation. The first one is, to get conviction, you need simple rules. So the entire webinar is how and when to buy stocks and how and when to sell stocks. So which one, how to determine, how to analyze them, and how to take action. So all of this will only happen if you have strong conviction, right? Most of the time, it's easier to buy because you get excited, and then for whatever reason, like maybe sometimes it's a bad reason, sometimes a good one, but in any cases, when you press the buy button on your brokerage account, most of the time is because you are confident that you're going to make money. Like, that's the whole goal, right? So it's really rare that you're going to close your eyes, like, oh, I'm not too sure I should press the buy button. I'm not going to do it. No, I mean, you press the buy button and then you're just like, yeah, I'm adding this ETF. I'm adding this company to my portfolio. I'm feeling good about it. I'm feeling good about my future. I'm following my plan. I'm super excited. So this is what you need to gain conviction. You need to simplify things. Not too long ago, I had a member asking me, he's like, Mike, why do you sell stock ABC? And he's like, you mentioned a couple of reasons, but I mean, it seems to me that is just not enough, right? It should be more thoughts into that. And what he was implying probably is a very long, thorough analysis of all the reasons why I should have sold that stock. While I could have done that and it would have been great, but when a company breaks one of my simple rules, why would I go the extra mile to keep on going, asking myself if I should sell, if it's the right time to sell, if the company can recover, if they could turn things around, and I've seen that so many times. People are just like, yeah, I hope that they will turn things around next year. Okay, so hope to turn things around is not an action. It's just wishful thinking. You don't even know what the company should do. You just hope that the stock price will go back up. But that's not enough. I mean, it's nothing. It's pretty much like if I say, oh, I wish the Habs will win the cup next year. I mean, well, they could if they do step 1 to 57 because they're very far away from winning the Stanley Cup. But they could. They just have to do a lot of things and make a lot of changes. But if I'm not even able to define those changes and to know exactly what's going on, well, then it's just wishful thinking. And they will turn it next year. So you're just giving you 12 to probably 18 months because you're just going to think, anytime in 25 is going to make it. So even if it's in November 25, maybe it's going to be good. So you don't define anything, you keep it blurry, you don't even have a real time frame, and you're not saying if this company does not go back on track by September of 2025, I'm selling. You're just saying, I hope they will do well sometime, somehow. yeah, of course, you lack of conviction. What's going to happen in 5 years from now? You're still going to have that stock in your portfolio. And I'm not joking. Like, I'm sure if you look at your portfolio, you have those kind of stocks that have been laying around because you do not have simple rules. When you have simple rules to follow, and I'm going to discuss those rules during the webinar, it's super easy because if a company breaks a rule, it's out. If it's all good, well, then you keep holding, and that's as simple as that. It doesn't need to be that complicated. Investing is a lot in your mind. Once you do the hard work, after that, it should be simple. Second key point of that presentation will be to always, and I say always, make sure that the narrative matches the financial metrics that you are tracking. So, for example, the narrative is the story, like the story behind the stock. Like, Alimentation Couche-Tard is going to continue to grow by acquisition. It's going to offer more fresh produce and more like their own brands inside their convenience stores to boost organic sales and to increase margin. That's the story. That's the plan. That's their strategy, right? But is it going to happen? That's another story. And how you can measure that? Well, it's pretty easy. If you track financial metrics such as operating margin, such as revenue and earnings per share, you will see if Couche-Tard is actually growing by acquisition, increasing their revenue by a big slump each time they're making acquisition, and then selling more fresh produce and their own brands to improve their margin. You're going to see that as well. And in their press release, they're going to talk about organic growth and acquisition growth. And if the narrative matches the financial metrics you're tracking, well, then you have a pretty solid investment to be made. So you should buy or you should hold that stock. So the narrative and the financial metrics are super useful together. Sometimes we have a very strong story, but poor financial metrics. So then we enter into a little bit of like gambling mode saying, oh, I think I'm going to buy this one because that has an amazing story, but we have like no measurements to prove that it's going to happen. But if it does, I'm going to make a lot of money, and that's great. But if you do that with most of your stocks in your portfolio, chances are you're going to be wrong. And like from time to time, and your portfolio return is going to suffer. So you could do that for some play money. That's fine. I have like up to between 5 to 10% of play money in my portfolio. Most of the time it's around 5. I set a maximum of 10, but that's really where I put a strong narrative without financial metrics. And then I'm just hoping that my narrative is strong enough to make it happen. However, what I do then is I apply a simple rule. My investment horizon to make that narrative happen is within a time frame. Most of the time, the time frame is 18 to 24 months. So that stock, when it enters my portfolio as a play money, so it's not like a big part of my portfolio. It's not a big chunk. It's like a small, just to make me happy and drive some dopamine and just like make it fun. But if the narrative does not translate into real numbers within 18 to 24 months, it's over. So the clock is ticking. As soon as the sticker enter my account, it has 18 to 24 months to prove me right, or actually prove me wrong. Because if after 2 years, the financial metrics are still stocks, the stock price doesn't move or go down, well, I was wrong with the narrative. I sell, I move on. Simple rules. I don't ask myself, oh, maybe the narrative will take a little bit more time. Doesn't matter. Like, just act on simple rules. And finally, and that was just like right before we end this podcast, so that's perfect. The third key point. So the first key point, to summarize, conviction equals simple rules. The second point, narrative plus financial metrics will give you conviction and a strong investment in your portfolio. And the third one, super important, today is the best day. Today is really the best day to do anything. It's the best day to quit smoking. It's the best day to get in shape. It's the best day to start running. It's the best day to invest. It's the best day to sell your losers. It's the best day to ask for a raise. It's the best day to say everyone that you love them. It's always today the best day to take action. So there you go. Conviction equals simple rules, narrative plus financial metrics, and today is the best day. If you want to know more, if you want to have the full story of that webinar, because I'm telling you, that was just a small snippet, well, go to moosemarkets.com/webinar or go in the show note on Spotify or on Apple Podcasts, and you are going to be able to register to that webinar. It's going to be a lot of fun. I'm full of energy today. I guess you can feel it by my voice anyways. So I'm just looking forward to meet you there. All right, Moose, that's enough for today. Don't forget, if you have like 10 seconds and I've given you some value today, go on Spotify, go on Apple Podcasts, click on the review part and give me that 5-star review. I'm growing fast. It's fun. The podcast is always free. I'm not putting ads on that. I'm just having fun doing it. And the more you share, the more you rate the podcast, the more we help other investors invest with more conviction. So thanks to you, we are able to do that as a team. So I'm counting on you. I'm going to see you at the webinar. And don't forget to rate the podcast. It helps a lot. Take good care, Moose. We're going to talk again tomorrow. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.